What's up guys, welcome back to Modern Options. In my last few videos I've been talking a lot about credit spreads and debit spreads and just different ways that you can trade those. Some people might be deterred away from doing credit spreads because they either have to put up $100, $250, or $500 in collateral because of how wide different strikes are in certain stocks. But there's a handful of stocks that you can trade that you only need $50 because it's only a 50-cent wide spread. In this video, I'm going to show you 10 of my favorite stocks that have 50-cent wide spreads. Let's go ahead and get right into it. The first one is going to be SPY, and that is an ETF that mimics the S&P 500, which has the top 500 companies in the US, and has humongous daily volume, around 150 million plus every day. And as you can see, it had the giant dip during the coronavirus, but it's making a steady case all the way back up. So one thing that's great about SPY, it is the only stock on the market that has 3 expiration days per week: Monday, Wednesday, and Friday. So there's many days that you can trade it. Not every single expiration date is going to have a 50-cent wide spread. A lot of times you'll see that they're just the weekly ones. But you can see here, you could do a 50-cent wide spread between that 377 and 377.5 strike. So you only need $50 and you can do some credit spreads 3 times a week. I just put one on SPY today and I ended up netting 20 bucks for a 1-day to expiration credit spread. All right, so the next stock we're going to talk about is IYR, iShares US Real Estate ETF. So IYR tracks a market cap weighted index of US real estate equities. It's got a bunch of different REITs in it, which stands for Real Estate Investment Trust. And I'll go ahead and scroll down and show you some of the top holdings that are within it. So we got American Tower, Prologis, Crown Castle, Equinix, Digital Realty Trust, Simon Property Group. So you can see those all right here. IYR is not too volatile of a stock and has some pretty range-bound patterns, so it makes it great for doing credit spreads on it and collecting some premium. Recently, it's been going up with interest rates being low, and it's kind of halted a little bit with the interest rates starting to rise again. But this one does have 50-cent wide spreads, so it makes it great for traders with small accounts. The next stock we're going to talk about is TNA, or the Directional Daily Small Cap Bull 3x shares. So this one is a little bit riskier of one to play because this one follows the Russell 2000, but it has 3 times exposure. So that just means that if the Russell 2000 index moves 1% in a day, TNA will move 3% in a day, which can sound great, but it's also the opposite is true if it goes down. If the Russell 2000 goes down 1%, TNA will also go down 3%. So ever since coronavirus happened, it's been on a steady climb upwards, so if you do choose to play TNA, you'll have to play this one with caution. With this one being a 3 times exposure stock, a lot of their premiums are going to be pretty high, as the implied volatility is going to be pretty high. So this one's really good to squeeze out a lot of premium week to week. And that's going to lead us right into the next one, which is IWM, or the Russell 2000 ETF. This stock follows the Russell 2000 index, and you can see some of its top holdings right here. It's got Plug Power in there, Penn National Gaming, Caesars, Novavax, Redfin Corporation, Sunrun, Lithia Motors. So it's got a lot of those mid-cap and small-cap companies within there. This one's another index, so it has a lot of volume as well. And again, has those 50-cent wide spreads, so you can trade with a smaller account. Next stop we're going to go into is GLD, which is Spider's Gold Trust ETF. Spider is the same company that makes the SPY ETF that tracks the S&P 500. They're just an investment company that has a whole bunch of different ETFs in different sectors. So this stock tracks the gold spot price, less any expenses and liabilities, using the gold bars held in the London vaults. So basically it just follows the price of gold throughout the day. So it's not technically an ETF since it doesn't have any holdings within it. It just follows the price of gold. The next stock we'll talk about is SLV, or iShares Silver Trust. This one is the same thing as GLD, except it tracks the silver spot price with the silver bullion held within London. Again, this one doesn't have any underlying holdings because it just follows the price. There was a recent surge going down here in March, bringing it all the way up to about $26. But for the most part, it's a pretty safe stock to roll credit spreads on every week, and it's not too volatile. Every week, you're gonna be able to find at-the-money options and even some out-of-the-money and deep-in-the-money options that are all offer 50-cent wide spreads. This is a relatively safe play because the metals don't move as much, pending any catalysts that come out from market news. So just always make sure you're utilizing risk management when getting into these plays. The next stock we'll talk about is MGM Resorts. So they have just a whole bunch of resorts, entertainment, nightlife, restaurants, casinos, just all around the globe. So this is just one of those coronavirus plays where it's gone down a lot when coronavirus struck, but ever since the vaccines have been coming out, this one has been on a steady increase. So it's a relatively safe play, and for the most part, it's not too volatile of a stock, and you should be able to collect some premium trading credit spreads on this every week. And it looks like this one has a pretty good amount of 50-cent plays that you'll be able to get every week. The next stock we're going to talk about is AT&T, or the ticker symbol known as T. Everyone knows AT&T. You might have it as your phone provider right now. They are what's known as a value stock, so they're a pretty high dividend payer. I believe it's around 7% right now. Yep, 7.13%. So there's not a whole lot of growth within this company, but they've continued to increase their dividends year after year. And this makes it a very good play because it doesn't move a whole lot. So you can do call credit spreads or even put credit spreads on this. And this is a great contender to also do iron condors, which I'll explain more in a future video. All right, guys, the next stock that we're going to talk about is Ford, ticker symbol F. Everyone knows Ford. Recently, they've almost gone up 100% within the last 6 months, floating around $6.50 at the lowest. So to get to 100%, it has to go up to 13. So it's looking pretty good right now. They've had a lot of good sales. I've even seen some stories of some people in Texas powering their homes off of their Ford trucks. So they got a lot of good things going for them right now. Last ticker symbol we'll talk about, guys, is American Airlines, ticker symbol AAL. This one decreased in value a lot when Corona hit because it was one of the travel stocks, but since then it's had one bull run, and then within there it's just been kind of steadily increasing over time. It still hasn't recovered to pre-coronavirus levels, but it's a great stock that's heavily traded, and you should be able to find some good premium with great liquidity every week, and it has 50-cent wide spreads, so it makes it great for people with small accounts. Alright guys, so that's the end of the video. Just wanted to get you guys some tickers that you all can look at and put on your watch list if you have a smaller account. I look at these a lot, and I don't make trades on them every week, but I keep them on my watch list so I can see if there's any good opportunities, or if implied volatility is a little high, I like to sell premium and get that passive income going. If you guys have any questions, leave them down in the comments below. If this video helped you out at all I ask is that you leave a like on the video, and I'm posting videos every week, so make sure you're subscribed so you don't miss out.